Hello everyone, welcome back. This is the second part of mutual fund series where you can learn how to find best mutual fund as per your own investment objectives and goals. If you have seen part 1, you are already ahead of most people. In this video, we will go one level deeper in mutual fund screening. If you have not seen part 1, pause here and watch because together they will make you 100% confident in picking your ideal mutual fund. Let's take recap of part 1. We have learned basic filters like AMC, expense ratio, NAV, SIP, and more. But that's only half the story. The next set of filters will help you fine-tune your shortlist, matching funds exactly to your needs and goals. Next filter is category. You must have heard equity fund, debt fund, hybrid fund. So just like food category, veg, non-veg, sweets, mutual funds also have category based on where they invest. In equity mutual fund, you will get higher returns, but there would be more ups and downs. These are best for long-term wealth, suppose 5+ years. Debt mutual funds are stable, less risky, and suitable for short-term investment. Hybrid mutual fund is mix of both equity and debt. Apart from these, there is other category as well. That includes gold, international stock, and other sector-specific funds. This is suitable for investors who have unique goals and want extra diversification. If you want to build your wealth in long term, you are in no hurry, you have patience, you should go for equity funds. If your aim is short term and you are creating some emergency fund where you are parking your money for some time, you should go for debt funds. Equity funds may give you huge returns, but there are risks involved. This may not be suitable for you if you are keeping it as an emergency fund. Next filter is plan. It may be growth plan or dividend plan. In growth plan, profit won't be distributed to the investors. It will stay invested in the business and grow faster. It is a great mean of long-term compounding. Dividend plan and income plan will pay you at regular interval, but it will slow your wealth creation process. If you don't need the money soon, you should go for growth plan and let compounding do the magic. If you want regular cash in your hand, you should go for dividend or income plan. Next filter is AUM, asset under management. So what do you mean by AUM? AUM is the total money managed by funds. Big AUM usually means trust and stability. But if fund is too big, it can slow your future returns. If a fund has 10,000 crore AUM, that's the total money invested by all the investors combined. If the fund has large AUM, it can handle market ups and downs better because it has experience and more diversification. But in actively managed fund, it becomes harder for fund managers to find new opportunities, especially in mid and small cap categories. If you want to invest in large cap funds, you should prefer higher AUM. It will bring stability and consistency. If you want to invest in mid or small cap funds, you should avoid very high AUM because it can limit the flexibility and reduce your potential gains. If you want to invest in specific sector or thematic funds, smaller AUM is fine. You should focus on fund managers' expertise and sector outlook. So it's a takeaway. AUM will tell you how big and trusted the fund is, but it won't tell how it will perform next. Next filter is 3-year CAGR percentage. CAGR shows average yearly return over 3 years. It's like checking any player's average score because it is more useful than checking only the last match score. Look for consistently good CAGR. A beginner can set this filter as minimum 10% for equity funds and 6 to 8% for debt funds. But remember, past returns never guarantee future performance. Next filter is alpha. It means how much better fund did as compared to its benchmark. If the fund has positive alpha, it performed better than its benchmark. It's like players scoring above the team's average. If you want to beat the market, go for positive alpha. But for stable and low risk goals, alpha is not important. Next filter is absolute return. This is the actual return given by fund in the last year. But don't rely on this if you are a long-term investor. Let's conclude this video. All filters are not suitable for all investors. You should select the filter as per your own investment objectives and goals. If you want long-term growth, focus on equity growth fund having high 3-year CAGR and having a solid AUM. If you want safety and stability, focus on short-term debt funds having stable AUM and focus on lower CAGR. If you want balanced approach, you can go with hybrid funds, mid-level alpha and moderate expense ratio. Now you know the useful filters for building your best mutual fund shortlist. Spend a few minutes using these filters, match them to your goals, and you will easily become successful mutual fund investor. Watch part 1 for basic filters if you haven't already and hit the subscribe for part 3 where we will see the risk related filters and other portfolio composition. Drop your questions in the comment section. And share this video with your friends to make them also successful mutual fund investors.